absolutely fine. So I guess I'll take it back from the top. First things first, guys. Obviously, not financial advice. Everything here, education purposes and entertainment purposes only. I hope, Alex, you've noticed. Matthew, I'm less sure if this is something you're paying attention to that's on a daily basis, but we just hit all-time high silver prices as we speak. I made this presentation earlier today, $61 silver. We just passed 62. Biggest noticeable thing here, because obviously, yes, we have higher prices, is that the silver backwardation has ended, at least for the time being. What does that mean? It means the spot price, so the price for buying silver today, is not more than the futures price, right? We had that inverse for quite a while. So that's ended for the time being. Doesn't mean it can't come right back and apply more pressure, but for the time being, that has ended. So it at least seems like inventories might be better. Now, someone like myself has a hard time believing it and think that backwardation can come right back and there still has potential for supply problems. But on the surface, it's a healthier situation between future prices and current spot prices. Okay, just flip to the next slide here. Well, obviously, I think it goes without saying, we have a lot more news on the gold and silver front, primarily on the silver front. Really, as silver takes the lead, what tends to happen is most of the press, even if gold performs well, most of the press and the news coverage tends to really highlight the silver. I highlighted one of these news because I just thought it was hilarious. It was basically saying silver news today, AI boom propels silver beyond $60. Right, like this idea that this commodity cycle that we're seeing right now has anything to do with AI is the stupidest biased piece of information, where this is probably some form of perma bull and AI who wants to credit most of whatever's going on into the world from that. But yeah, I just thought it was quite interesting, thought it was quite entertaining to read. On a more relevant note, we have the central banks buying and selling of gold. So the selling is the purple chart down here, and the buying is the blue. As you guys can see, buying has been outweighing selling all year, even all of last year. We cooled off around gold's pretty much peak, but since then we've been dramatically going higher and higher. We have the October data. This last rectangle isn't September, it's actually October, 53 tons. So higher from month to month. We don't yet have the exact November data, but it seems like China, Brazil, and other players have been buying. We're going to probably have to wait a couple more days, weeks to actually get that finalized data. But again, this is just helping with the idea of like this floor that's just perpetuating its way up, along with investors slowly coming in, diversifying, hedging their portfolios, however you want to play. Obviously, most people aren't like myself who are putting most of their capital in the space. But even just we're talking about 5-10% diversification in a sector or in a commodity like gold or silver ends up being a lot when it's done at mass. And we can see here Goldman Sachs also predicting more central bank buying of gold around the world. Again, when we say central bank buying, really what we're saying is if we take all central banks and we were to look at the ledger on sales and buys, we'd be expecting more buys. So a positive pressure upwards. So Matthew, we didn't do technical analysis yet, but this is quite basic. Alex, I don't know if you, we went over it recently actually, but the reason I show these charts is because we want to see how gold miners are performing vis-a-vis gold, right? You can see a pretty much perfect correlation, right? You get to new highs in the gold price, on the left-hand side, and the miners follow along. You get to new highs in the miners. Then we're not yet back to new highs on gold, but we're pretty damn close. And the miners are pretty much on their all-time highs, right? So you have this pretty much near perfect correlation. Now, normally what happens is the miners move more because they're more elastic, right? So near correlation, but you have a higher volatility on the miners than you do with gold. So the reason why someone like myself has been really shouting across the rooftops for the last month or so in silver mining specifically is because here you see that near perfect correlation. But if we look at silver, what's interesting is for silver, we are now at all-time highs in silver. Near 15, almost 20% higher than the last high. But if we look at the miners up until the last like 2 days, we've basically played catch up in 2 days. But if we look at the silver miners, which should be actually more elastic than the gold miners. The reason why is their margin expansion is actually growing more than the gold miners. In really layman's terms, because the silver producers were making so little, their costs were so high. Well, if their profit margin goes from 3 to 30, that can 10x. Versus a gold producer, if his cost is 1,000 and he was selling it for 3,000 and now he sells it at 4,000, your margin expands, but it doesn't have the same multiplicative effect. Sorry about that. So technically, silver and the silver miners should be correlating the same way, but the volatility should be like 3 vol on the silver miners, maybe 2 vol on the gold miners vis-a-vis their metals. So the fact that you have this flat line, which was actually a decline about 2 days ago, and you have this massive run in the silver metal, that divergence to me screams value, because I actually can measure what happens with these higher silver prices and the impact it has on these companies. And the value should be significantly greater based on this metal price, which is also exciting because that means if we have a pullback, we go lower from here. So let's say we have a pullback back to the highs of $54 in silver. Technically, the miners were over here. But then if we were to pull back, you could expect the miners to come down with the metal, and you could expect something back here. And I would love to buy silver miners at a lower price, at a high silver price, $54, $53. I will take it. The same reason I love to take it right now, because of this divergence here. So I'm really, really interested in the silver miners specifically, even though they've run up. I bought them when they were down here, and I'm buying them along the way up, right? I know I went over all this quickly, guys. Any questions, any comments, anything you want to go over or wasn't clear, feel free. Otherwise, I'll jump into the next slides here. Okay. Okay. Recent buys. You know what? Maybe I'll start with recent sells. It's a shorter list, pretty much more straightforward here. So BlackRock, Silvercorp, and Outcrop Gold and Silver. Both of these, I'm going to go over them together. The reason why is they're both exploration and development silver companies, right? So they're nowhere near producing. Their goal is to expand the resource, and then ultimately they're going to have to go through the permitting cycle. They're going to have to do an environmental assessment. They're going to have to all of those steps, right? So they're a long way. The reason I buy these is I basically buy them when I like the value of the resource on a per ounce basis, right? If I can spend $100 million and get 200 million ounces of silver in the ground, which is kind of like paying 50 cents per ounce of silver in the ground, I like it, right? On the flip side, if I end up paying $10 per ounce in the ground of silver, it's like, well, that starts to be expensive. So I'm probably going to rotate out. So I sold both of these because it just got to a point where the price per ounce, which is one of my more favorite valuation methods for these types of companies, just it started getting a little bit high. I have a perfect chart to see this. So I own Silver 47. This is the presentation of a different company, but in a similar boat, who explores for silver primarily. But if we look BlackRock Silver at their current market cap, approximately, we're selling at $1.70 per ounce in the ground. Now, yes, they're exploring for more. They're highly likely to find significantly more, but ultimately you're paying sub $2 for an ounce of silver in the ground. Outcrop Silver, who I bought significantly earlier in the year, was now selling at over $3 per ounce in the ground. It's also a much smaller resource, only had 40 million ounces of silver. So smaller resource, high cost per ounce. So really everything you're betting on at this point, you can't really hope that this $3 becomes $6, right? It starts feeling really expensive. So all you're hoping for is you're speculating for expansion of a resource. Some people love doing that. I don't have that skill set, right? I'm not a geologist. I'd love in the next couple of years to have a network of people to be able to go to a resource, walk around, actually be able to get more of a tangible advantage on the geology front. But for the time being, what I can do is look at comps and be like, all right, you know what? Silver 47 has a lower market capitalization than Outcrop Silver. We're in a better jurisdiction, right? This is in Colombia. Over here, you have 3 US states. You have Nevada, Alaska, and New Mexico. And across its 3 assets, you're looking at right now over 300 million ounces of silver, right? So you're basically paying nearly 1/10 of the price per ounce of what's already there. And they're very aggressive on exploration too. They have a lot of land. So for me, when you have these differentials, yes, it's quite possible that the grade here is a little bit higher. You have some good insiders. There are some advantages, but it just the pros don't justify the cons. And just through comparative analysis, I have to basically converge my eggs in the better baskets, or what I can perceive to be the better baskets. It was harder for me to sell BlackRock silver because it is a bigger resource. They have at least 100 million ounces. That being said, it moved up quickly. I was happy when I returned, and there was just so much opportunity right now. I rather chase better alpha. Okay, so that was the reason behind those 2 sales. New Found Gold, it's actually a company that Alex put on my radar. And yeah, I was a pretty large shareholder. It was one of my more core positions actually over time, believe it or not. I don't think we actually talked about it, Alex. But that being said, it basically went up over 50% in a short amount of time. This is a company right now with like $1 billion Canadian market cap. For the next couple of years, we're not expecting crazy production. We're looking at around like 50,000, maybe 100,000 ounces. So don't get me wrong, it can grow into its valuation, but the biggest problem is like if to go to a $1 billion valuation to like a $5 billion valuation, which is like the type of move that I'd like to see, like a 5x over the next couple of years at least. A lot of stuff had to go right because they have this first project that needs to ramp up. Then they need to spend hundreds of millions of dollars and use the profit of the first one to put into capex on the second project, and everything needs to go right there too. So there's just so many unknowns. Again, through comparative analysis, I looked at other projects, capex, other possible pros and cons, and I saw better opportunity. So I took my gains here last week, and a little bit off the table again this week. I think I might still have a small position, but nothing huge here. I might have gotten fully out as well. I'd have to double check. But yeah, very good company. This is not something that I'm just taking off my radar. If ever I see value here again, I'm happy to pile back in. Another thing that kind of made me think that like short term, I'm not expecting huge amounts of upside is one of the biggest shareholders, institutional, sold like around $150 million worth of stock at around $4 a share. So the way I see that is, even though I have projections on value based on DCF of today's present value of future cash flows, I see this as still probably a 100% mover, if not more. Again, this is if the market chooses to value things the same way I do. But that being said, I think for the short term, because this big shareholder sold a huge amount at these prices, I think that spooks the shareholder base. I think people are going to be a lot less open to buying into this frenzy. And I just think there's better names, better catalysts, and yeah. Fair. Okay. Impact Silver. So this was a tough one. Yeah, so I sold all of New Found Gold. Impact Silver is the one I trimmed, but I kept a little bit. So Impact Silver, I was sad to let go of this one because it is a tiny silver producer, but they are a producer. The reason I sold them is because I'm not sure if Matthew, you remember this? I'm not sure if we went over it in our calls. Alex, I've told you that technically the highest cost producers have the most leverage, right? Because if they were making like $1 in profit because they had crazy costs, now you go from $1 to $30, that's a huge amount of extra margin. Well, the issue is when you get to such a small level, Impact Silver's level, what ends up happening is a huge chunk of your revenue is just paying G&A, right? General administration, paying your CEO. And the fact that you have these fixed costs ends up being like a big weight on your shoulders, right? Because if you're making 10 times more money, you're not spending 10 times more on your core team. You're not spending 10 times more on staying listed on the exchange. So the issue with these tiny ones is their proportion of their revenue that goes into G&A and goes into just staying compliant, legal, the exchange fee, all of that is a much bigger chunk. So it requires that much more for them to show a profit. So I was just very disappointed looking at their last quarter numbers. There is exploration upside. They are growing. They raised a lot of money. Like they could definitely turn this ship around. But really, it's one of those things where it's like, I need them to get to higher production, right? It's not just a larger margin to me that's going to change the story. I still think Impact Silver is a company that is positioned to 3, 4, 5x from here in a strong silver market. But that being said, I just think profits are going to be a lot less impressive than its peers that are a little bit bigger, like SilverX or Guanajuato next year. So I decided to rotate a little bit out of this one into Santa Cruz, which is actually not on my list, but maybe I start with that one. So Santa Cruz has a huge amount of silver producing assets in Mexico and Peru. So I like it because they're diversified in their production, a lot of optionality in terms of discoveries, exploration on their land packages. And yeah, just overall low price to earnings ratio, multi-asset producer, de-risked, good cash, and great margins right now. So it's become through this rise, I think in the last like 3 weeks, I'm up like 60% on that position. And I would say it's probably one of our near-term mid-tier producers. I think it's positioned in the next couple of years to maybe line up to be almost of a major in the silver producing space. There aren't that many names. But yeah, it's a very interesting growth story. Okay, so buys now. Coeur Mining. First things first here, what's interesting, Coeur Mining is actually currently Eric Sprott's largest buy over the last couple of months. I just saw that yesterday. This is after I bought, not before. I'm not just bandwagoning off of one investor. Actually, small side note about that. I was having a discussion today with somebody around Eric Sprott's portfolio. And some people that are maybe less understanding of the space, what they'll do, which I think is not necessarily inherently clever, is they'll look at what the big money's buying and automatically they'll assume it makes sense for us to buy. Well, the difference is someone like an Eric Sprott is an institution, right? So meaning you actually have to look at what that person's interests are in the company. Number one, he invests through debt financing as well as equity, meaning he might have a stream on a project, right? So let's say you have a gold producer that's set to start producing in the next 2 years. Well, maybe he financed them 2 years ago, $15 million, and now he was able to contractually get a stream of 2% on the top line of all the gold in perpetuity on the land. So now he has an additional vested interest in the company to make sure they get to production because he gets 2% on all the revenue it's going to generate into the future. So now us on the outside looking in that just see, oh, Eric Sprott bought this company, bought the stock at 50 cents a share, means he think it's going to go up from here. Not necessarily. Means he wants to make sure they have the money they need to get to the point where they're producing so he gets his 2% NSR, right? So we need to understand how these people operate, because otherwise we can do these mistakes of trying to replicate their model without actually properly replicating their model, especially when they're double dipping and we're not in a position to double dip. So always take that with a grain of salt when you see this big money come in. It's like, do they have additional layers of, I call it sweetener, right? It's kind of like when they get a warrant when they buy stocks through a placement. It's like, if I buy a stock on the open market, I get the stock. If they do a private placement and they get a warrant, that means they get a stock and they get a warrant, which is basically just free optionality into the future. They got a better deal than we did. We need to take that into account when we're seeing what it is that they're doing before we just try and like one-on-one replicate their strategy. Okay, so Coeur Mining is his largest position and the one he grew the most last quarter. That being said, it is in orange because this was considered a silver producer up until pretty much last month. They made a massive purchase of New Gold, I believe the name is. It's one of the largest gold producers in North America. Not fully largest, but let's say we're talking like top 10. So Coeur Mining is going to become a massive behemoth coming next year. They basically offered, I believe, a 15 or 18% premium. It's an all stock deal, so no cash is going out of the company. But it's bringing their silver ratio of revenue from like 25% to like 10%. So Coeur Mining is now a gold producer for all sake of argument, not this coming quarter, the next from here on out. It's now a gold producer with 10% exposure, which is quite interesting to silver. But like we can no longer put it in the silver producer category. It's just some free extra optionality, which is quite nice. Don't get me wrong. Borealis. This is a upcoming Nevada gold producer. Now, I will show the presentation on this one because I genuinely think this company has been very underlooked. So first things first. Oh, I'm not sharing the right screen, am I? Okay, let me see. There we go. Okay. First things first, this is our cap table. So we got insiders who own plus minus 10% of the company. Rob McEwen, who owns 14%. Eric Sprott, who owns another 10. Institutions own a 31. So amongst them, you have a very, very strong shareholder base, which is nice because especially if you're dealing with what you consider to be a undervalued or distressed asset, our biggest concern is like, what if a big guy comes in and buys us for pennies on the dollar? Well, none of this 61% or 65% is open to selling at these prices. I'll just throw that out there. There are a lot of interviews. They're a very like public company. They share a lot of information, attend conferences. So I love companies like this. Obviously, Eric Sprott knows how to do his due diligence as well. But you have a young CEO. The guy's 39 years old, but he's on the ball, very sharp. Okay, so what I like here is one of the biggest reasons this company was penalized, I would say on a valuation basis, is because when they bought the Borealis mine, there was a historical resource. And that historical resource was not able to meet the criteria in order to be part of the MRE resource today. There's basically just like standards, right? Like things that need to be properly done. It needs to be audited in a certain way. You need to be like all these check boxes need to be done in order to qualify for your resource to be in the current categories: measured, indicated, inferred, proven, and probable. So what happens is they bought this with a historical resource, but because it was done a long time ago, it doesn't actually provide the criteria needed to be part of a non-historical resource. So they have to be careful with the way they communicate this. That being said, there's a very, very, very high probability, again, not a financial advisor, not financial advice, that this resource is there. Yes, plus minus, obviously discounted as you wish, but we're talking about, I believe we have the figures over here. I don't want to give the wrong numbers. I think it's 1.8, sorry. Okay. 1.8 million measured and indicated, and another 200,000 in inferred. Fairly good grade. The inferred is not really that appealing, but again, we're talking about a small portion here. Honestly, couldn't really care less. Measured and indicated is really what gets interesting. Now, they had two choices in front of them. It's like, either we do everything we need to do to get this resource into the proper format, or we just go straight into production, right? And they did not want to take that extra time. If they were going to spend money, take more time versus just go straight into production. We are very confident this is here. And why are we going to wait? We have high gold prices, all-time high gold prices. Let's just do this. And for somebody who studied hundreds of mining companies over this last year, one of my biggest criticism is this lack of proactivity. It's like you watch companies and it's like if in some cases they have to be like screamed at or smacked in the face by gold and silver prices in order to actually do the steps toward production. So when I see companies like this or companies like Talisker who kind of skip a couple steps, yes, it can hurt them in the future, right? There are unknowns by doing that. But to just get to a point where they're making some money, because in the event things do go well, you get to a point where you can self-finance based on cash flows and not through dilution of shareholders. And when you get there, it's blue skies. right? So I really like this strategy. They have a clean path. They're already started production now, and it's going to ramp up over the course of the next few months. Very excited about them. I modeled out their valuation a while ago, just based on the Borealis mine. As you guys can see, over the course of this 15-year period, mining 700,000. If you remember, there was 1.8 million in measured and indicated, another 200,000 in inferred. So just these 700,000 at a $4,000 gold price, considering all-in sustaining cost of 2,000. This is the value I get. And that is with a very small terminal value on the additional resource. Now, you might be saying, well, it's 1 million ounces that's left after this. Is that really worth 150 million? Well, number one, yes, for a producer. But then number two, which is the really exciting part, they have a second project. And they don't just have a second project. They have a second project. Let's find the actual map here. They have a second project. We're talking like 200 miles, I think it is. It's 150, 220 miles. 220 miles away from their Borealis mine. They have Sandman. This project, I love when companies do this, they have sensitivity tables. So they did a actual assessment here, and you can see the NPV of the project at $1,800 gold is 120 million. At $3,000 gold is 420 million. Again, add 1,200 and see how this sensitivity went up. At $4,000 gold, we're now at 4,200, which is the same movement from 1,800 to 3,000. It's $1,200 more. You basically get to a point where just the NPV of the Sandman asset, which is like, this is like a 3-year play. This is like the next step. They're going to start generating money from the Borealis mine. And then they have this already in the pipeline. They've already studied it. They already have a baseline resource to actually get things going. And the NPV of just this asset at current gold prices is basically, if I'm being conservative, I'd say 600 million, but at $4,200 gold, really, we're talking close to $800 million gold, $800 million in NPV at 6%. This is after tax. So you have this project here that is worth between, call it, you know what, let's give it 400 million, the NPV. And then you have this additional production. And what's the market cap of Borealis? This is in Canadian dollars, by the way. Everything we just saw, all of this is in US dollars. Borealis's entire market cap is half the net present value of the Sandman project at just $3,000 gold, when they have a whole other mine that's getting into production with a historical resource of 1.8 million ounces. I don't even have the Sandman project in this model. It's not there. I can add it. Right now, it's not there. Probably if I add it, it starts getting quite crazy, because if I add it, really, I'd put it, this is going to be terrible math. I'd have to compute it based on a discount model with an actual rate and capex in there. But ultimately, you'd be adding another $400 million to this. So you'd get to like $1 billion plus minus. And this becomes like 6, 7, 800% on an upside possibility. Now, I think the share price has gone up from here, but not by that much. We did come down. So that is one of the reasons I initially bought significantly lower. And this is actually me last week has been me buying into the rise. Done that for a few companies. Alex, you know that. So Borealis has been one I bought quite a lot at these ranges. I like it. And yeah, it's really just the name of the game here is getting to commercialize production at the Borealis mine, because once you can start generating positive free cash flow, it's like this is an incredible asset, tier 1 jurisdiction with the growth profile 200 miles away. So you have economies of scale between the two projects. It's like, I love it. Okay. Stellar Gold is, I think I said the video in the community chat. They are just a absolute massive project. So I think I'm still sharing the right screen here. Perfect. Okay. So I think I have the resource. Here we go. So across its assets, all in Canada, by the way, you're looking at approximately 16 million gold ounces, right? This is not a small company at all, like massive gold resource. Now we can see over here, we have Tower, which is really their focus in terms of it's the largest resource that they're trying to get to a position. This is probably the first one they're going to try and enter into production. They have Colomac, which is like the back burner, also massive project, but that's not the one that they're really trying to bring into production. And on top of that, probably sometime between 27 and 28, maybe 29 in that range, there's a path where they can start generating cash flow in the interim while they're doing everything they need for Tower with the Hollinger project, which is on Ontario, which Ontario has been known in the last couple of months to start talking about fast tracking permits. So this is a tailings facility. What does that mean? It means you have already these piles, right? Typically it's low grade ore. If we look here, I'm not sure if they mentioned the grade. No, they don't. But it's low grade ore, right? It's basically what you've extracted from the ground and you just leave piles and piles of tailings. But at these metal prices, there's money there. So they're just like, okay, well, while we take care of Tower to eventually get to production and then take care of Colomat, let's just make some money here. This is the lowest hanging fruit. We can get this done fairly quickly. So that's their quickest path to cash flow. And then from that point on, Tower and Colomac. So the way I see a company like this, like we're not expecting crazy production from them, not alone. Really, what we're expecting is you're buying, it's like the equivalent of like buying land, right? I'm not sure if you have anyone in your family who's like land banks and says like, I'm going to buy land in Botswana, I'm going to buy acres and acres and just hold it for 30 years. This is one of those companies for me, right? Like we're talking about 16 million ounces of gold. If I look at their current market cap, this is in Canadian, so in USD, 250 CAD to USD, 181. So we're paying around $12 per ounce in the ground in a tier one jurisdiction across a multiplicity of assets. These assets, by the way, the NPV of Tower, 2.5 billion. The NPV of Colomac, 1.59 billion. Now, the reason I said this company is not entering production anytime soon, even if they had the permits, is because the capex, so the money that's required for them to build these, is like $1 billion plus each. So this is more of your land banking. You're getting it closer and closer to a point where you can get your permits, environmental assessment, and all that. And then what ends up happening is a major gold producer does a joint venture with you, does a free carry, or just buys you out outright. Kind of what happened to Probe Gold. Now, to put it in perspective, Probe Gold, Canadian company, Probe Gold got acquired for 780 million, I think a month ago. Yeah, October 31st. 780 million Canadian. They have about 10 million ounces of gold in the ground, right? So if we do the math, quick, bad napkin math for a second, 10, you're looking at basically $78 Canadian per ounce. You're looking at basically what I would say in US dollars, call it 55 to 60 US dollars per ounce, which is 4 times higher on an enterprise value per ounce ratio. Now, geology is different, capex is not the same. There's all these other intangibles we have to take into account, but it's just an interesting comparable. And people like myself actually believe that Probe Gold was sold for pennies on the dollar. They should have never accepted this. It was a stupid decision. They just waited a year. This price could have been double. But it is what it is. Fresnillo is laughing to the bank. Can't really roast them for doing it. They were very clever about it. So that's why I have Stellar. Silver Tiger, won't spend too much time with them, but this, if you like silver, if you like the idea of near-term, quote unquote, producers, late-stage developers, they have just got their permit in Mexico. They just raised a huge amount of capital. So they have the money they need. They have their permit. They have a massive resource. At current silver prices, the net present value, I think at a 6 or 5% discount rate, the net present value of their open pit mine, so just what's at surface, The NPV is basically 3 times their market cap today. So I think their market cap's hovering around 300 million. The NPV of just the open pit mine is probably between 800 to $1 billion. So 3 times the market cap, possibly even 4 because there's USD to CAD. Thing is, right under the open pit, they have an underground. They have a massive resource with better grade. So to me, I'm basically getting a discount on the open pit, and I'm getting the entire underground, which is actually more interesting, for free. And they can self-finance the growth from that point on once they start generating the free cash flow from the open pit. So it's just one of those things where it's like, pretty much in my perspective, checking all the boxes for a developer. You have the financing, not a crazy high capex. They can build it from here on out. And they're starting to turn some heads around in the financial markets. So yeah, Silver Tiger, very good one. Next Gold, look, Alex, I banged the drum on this one enough. I have bought a huge amount, between like $1.25 and $1.50 in the last couple of weeks. Because it's just like, look, at the end of the day, anything can go wrong for anything at all times, right? Like, let's just start from there. Now, that being said, if you were to compile a list of 20 things you need to see to de-risk a project, Next Gold has all 20, right? They have 2 assets, one in Ontario, one in Quebec, both over 3 million ounces. Between those two, they both don't require a huge amount of capex, so around like 300 million in capex to build it. The reason I think it really got hurt is they did their economic assessments, feasibility studies, and pre-feasibility studies several years ago. So what did that do? I'm going to show you guys on the website, because this is really where the story needs to change. I'm excited. I'm going to Vancouver to a mining conference. I'm going to be able to meet some of these guys. But over here we have, they don't do the sensitivity charts, right? With Borealis, I was showing you guys what I liked here. Basically see the evolution of NPV when you adjust the gold price. Now, even then they stop at 3,000, right? But this is what Next Gold has never presented to investors. So you kind of have to extrapolate it in your mind, which the reason they don't do it is they expect their investors to be informed. But the thing is, it's like none of these mining companies for the last decade have tried to advertise to the average investor. It's just been like a dead silence zone there. They haven't even tried to deal with it. So this is like a current shift that's happening, where it's like, you guys need to start pitching to the average Joe, because they don't understand how to compute these numbers. But when you get here, you're like, okay, it's going to cost them 300 million to build, and the after-tax net present value of the project is 300 million. Like, okay, you double your money. That doesn't sound that interesting. Well, hold up. What is the gold price they used? 1750. And what was the cost per ounce? AISC was 1,000. That's a terrible margin. $750. So when you take the NPV with current gold prices, guys, every single one of these projects, every single one, where are they? Where are they? Where are they? Go back here. Each of these projects is $1 billion plus in NPV. So number one, you have a 3-to-1 ratio. If the cost to build it is, call it 350 million, and the NPV right now is $1 billion plus, that ratio is incredible, right? 3-to-1 like that, amazing. Now with a bit higher, we're talking about 1.2, 1.5 billion NPV. It starts going up actually higher. So you're sitting on a company that has its permits. They raised 150 million. They have financing for the rest of the capital. They have a line of credit. Like, the money's there. They just got their permits for the one in for the Goldboro in Nova Scotia. Sorry, I said Quebec and Ontario, Nova Scotia and Ontario. They just got their permit for Goldboro. They just locked in the money, or at least like call it 80 to 90% of it. The rest, if they need it, they'll figure it out when they get close to that date. And everything's in front of them. They're basically just going full throttle for Goldboro. When they start producing, they have only a few steps with Goliath. The Goliath is an asset that could enter production in the next couple of years, call it 4 or 5, 6 years. Goldboro by 27, maybe end of 27, 28, could be into production, producing 100,000 ounces plus minus on an annual basis. And I mean, I we do the math real quick. Even if your costs are double what they're saying, $2,000 per ounce at $4,200 gold, call it a $2,000 margin times 100,000 ounces. That's 200,000, which quick math, $200 million in free cash flow on just Goldboro. 200 million in free cash flow. Normally in Canada, we see like 15 multiples, 20 multiples. Well, 15 multiple at 200 million in free cash flow, $3 billion. Their current market cap is 300 million. And all the figures I just give before that are in USD. Their current market cap is like 350 million Canadian. Like, this is one of those things where to me, it's like, again, unintended circumstances can happen. But if I was looking for like a brain dead gold developer that could generate me like a 5x return, this is where I land at this point. This is my largest position for a development company at this point, and absolute full transparency. Now, I'm not saying it's going to go up like a rocket, but I'm saying this is a company where I can hold for value, not speculation, just absolute value, and I'm comfortable holding on this for a long time. Any questions on Next Gold before I flip it here? Are we chilling? Okay. Avino and Denarius. I'm not going to spend too much time on Denarius because I sent a video to the group. I would recommend for those who haven't looked at it, they are a near-term producer in both Spain and Colombia that are pretty much, they've entered production on one of the assets. They're entering production on the other midway through 2026. So pretty much right now. So you're just going from like zero to hero in a really fast manner, producing gold, silver, zinc, platinum, palladium, cobalt, like very polymetallic deposits across their assets. I see it as a very interesting opportunity. The CEO and founder has a massive position, and he's been adding to it. So I like the fact insiders are aligned with us. This is a company I recently went on my watch list. I did a lot of research in a short amount of time, and I took a pretty massive, for myself, obviously, pretty massive stake. Now, in full transparency, they were around 50 cents, 48 cents when I got in. They are now like 60 something. So they did move, but I still see deep value. Haven't sold anything for the time being, this valuation. Avino is probably, for when it comes to silver producers, I would say probably end of next year. I would say if things go to plan, becomes one of my favorites to my favorites in terms of risk reward, because you just have a company that's sitting on a massive silver resource. Massive. We're talking hundreds of millions of ounces. Good margins. And they're not overextending. What they're doing is they're basically just adding 1 million or 2 million ounces of silver production per year, right? This is their growth strategy. So this year you're expecting like 2.5 million ounces. Next year we're expecting like 3.8. The year after that we're expecting like 4.2. The year after that we're expecting like 6.5. So they're just going slow and steady wins the race, but they're producing free cash flow, good margins, and massive resource. So again, checks the boxes. They're not losing money. They're not burning some capital. So I think this is just one of those companies in the silver space where I think it's one of those where it's worthwhile to at least have them on the watch list. Look at how they're performing. This is their spread. And you might be saying, well, hey, they're not fully silver. Only right now, 49% of their revenue is coming from silver. Well, that changes just based on Q4. Right? Because Q4 silver prices went up so high. Now that 49, if you actually did it at the end of December, would be closer to probably like 55, maybe even a bit higher. But that being said, yes, they're producing copper, gold, and silver, which to me is like my favorite mix. Okay. If you can add a bit of platinum and palladium in there, you've got me. But this is like a perfect mix for me. I love the spread. And then, yes, as years progress, they're going to really focus and dial into the silver. So 67% becomes one of the purest silver plays at that point in 2029 based on its outlook. I think we've gone through these charts in past calls where silver companies have like 25% silver, 20% silver. Now Kerr has 10% silver. So like to be at 67%, that's 2/3. And that's assuming silver prices whenever this presentation was done. I'm guessing at current silver prices, because silver is outperforming gold, it might end up being higher. Now, copper is looking like it might outperform too, but this is what we got. So Avino Silver, not one of my largest positions yet, but I have added to it immensely. Like I probably quadrupled my initial position in the last couple of weeks. So yeah, that's what we got there, guys. Touched on that. Any questions, Alex? I know maybe there's something on your mind or on your watch list. If ever there is, feel free. But otherwise, that pretty much covers everything I wanted to go over here for today. Or Matthew as well. I'm not sure if you're looking at any companies right now that you might be considering. No. All right, guys. Well, with that being said, I hope you guys have an awesome evening. And yeah,